Hi guys, so welcome to this course for cryptocurrencies, Bitcoin, ICOs, everything related to them, and how to get investing into them. You may have heard from some of your friends that they've earned 10 times their money or almost 100 times their money in a matter of a year, or in some cases just a few weeks even. I'm going to explain to you what they might be doing and how you might be able to get into it as well. So basically, from the top, you probably heard about Bitcoin. Now, Bitcoin is a cryptocurrency. It was developed in 2009 by Satoshi Nakamoto, which is basically an anonymous name. It could be one person, it could be a group of people. And it's a payment system that allows you to send money across the world very quickly, not instantly, but in a decentralized way that's not really controlled by any one entity, and in a way that the money can't be just declared out of thin air the way fiat currencies do. Fiat currencies are like most currencies issued by governments in the world today, like the dollar or the Argentinian peso or the Russian ruble, which are not backed by the gold as they were in the past. Let's say after 1971, Nixon axed the gold backing of the US dollar. So the dollar is basically, it's not food, it's not shelter, it's just something that people agreed that have value and that the United States backs. Bitcoin is something that people also believe have value and therefore are able to trade for other items of value, in some cases food and shelter. Shelter like in Dubai, for example, now we're selling apartment buildings for Bitcoin. Some hundreds of thousands of merchants are now accepting Bitcoin, and more are growing. But in addition to that assumed value of the cryptocurrency or the crypto asset, there's also another sort of intrinsic value to it, actually, as opposed to some popular beliefs, and that is the technology itself. And the assets, they can't really disappear. They're distributed across a network of users. And the technology itself has some value. Now, money itself is actually a technology. When you think about it, it's a technology that solves the bartering problem, the so-called problem of double coincidence of wants. That is to say, if I produce t-shirts and you produce jeans, and you come to my store, but you don't want t-shirts, then I have nothing to sell you. And I might want jeans, but I can't trade with you. Now, if I've sold my t-shirts previously for money, and you've sold for some currency, and you've previously sold it for the same currency, then you come into my store. You can, I can buy your jeans, or I come into your store, I can buy your jeans. Using that money, I don't have to give you my shirt. You don't have to need exactly what I want, and at the same time that I want what you have. So that double coincidence doesn't need to occur. Just one thing needs to happen is I want whatever it is you're selling, and I have the shared money, currency that in order to buy it. Now, Bitcoin is a technology that through a distributed ledger, basically note keeping, or a blockchain, keeps transaction periods, every 10 minutes or so, of transactions that happen between the parties in a distributed way that doesn't need to be issued by any government, is not controlled by any government. And there will be 21 million bitcoins in total when bitcoins start being generated. Currently, they get generated when a certain mathematical difficult function happens. It requires a lot of computational resource, a lot of computing power, expensive computing power, but as a reward, these miners that validate basically the transactions are rewarded in a certain Coinbase. Right now it's 12.5 bitcoins, which is worth quite a lot of money. It's now September 13, 2017. And Bitcoin's worth over $4,000, and they get 12 of them every time they validate a transaction. But validating these transactions requires, on average, upwards of quintillion attempts to find a right solution. And in order to find the right solution, right now the amount of total mining computers out there have more processing power than the top 500 supercomputers in the world combined. It's kind of wasteful. It's not very green on energy. There are other proof of work algorithms as they're called, proof of work, that show that you've done the work in order to prove something difficult, and therefore you weren't able to actually revise history because it was so difficult to do this thing. You weren't able to the whole point of this computation is to show that to prevent double spending is called the problem, whereby you may have 100 coins or bitcoins and you spend them twice. You send them to one guy and then you revise the history that you did so and send them again to another guy. Because the algorithm is so hard to take so much computing processes to show that you've done it correctly, then you can't. If you change any little part of history, such as whether or not you did already spend your money or not, everything in the rest of the history comes out differently. And so, because it takes so much computing process to change that history, to change more and more history as time goes on, it would be very difficult for you to change. To try to change what happened in the past and trick everyone into believing. Basically impossible to do that. You would need to have so much mining resources that it would just be not feasible. You would also, by that time, destroy the value of the very thing you spent so much money to create, which is the important, like the significance of that money, because people then find you a fraud, and that type of money, that type of cryptocurrency, not be worth anything anymore. Anyhow, that's getting a little bit in depth with all the blockchain technical aspects. Let's take a step back for a second. So after Bitcoin in 2009, in 2014, Vitalik Buterin proposed a paper, what's called a white paper, basically technical paper, something beyond the cryptocurrency. It's a crypto contract platform. Now what that means is basically Ethereum, which he released in 2015, is a global computer in a sense that you can. It's not. It's a more general form of something like Bitcoin. You can't. You cannot. You're not limited to sending only money or a transaction that represents a certain value, but it can actually do anything. Basically, it's just like any other computer programming language. It's called Turing complete. It can do anything that any other computer can do. So, for example, you can make an Airbnb-like decentralized app called a DApp or a D-app that, when you wave your mobile phone at a door, if you have some amount of currency in that mobile phone, these Ethereum or Ether currency, it can engage in a contract, a code contract with that smart lock in that door, like some kind of smart device that automatically pays the door and unlocks it at the same time, and you don't need any lawyer or third party to say yes you did pay or yes you didn't pay. Therefore, you should, the other party, the counterparty, should open the door and so on. So it's called a crypto contract platform. And this is very powerful because you can build D-apps or dApps like these, like this kind of decentralized Airbnb or Uber. And why would you want to do that? Well, some governments have a problem with Uber, and one thing is that in some cases they wouldn't be able to sidestep, they wouldn't be able to attack Uber as an institution because it's decentralized, but they could still go after taxi drivers. And there are other cases that aren't as political as that, but just would increase reliability, and in some cases also prevent censorship. So, for example, some people complain that Twitter and Facebook censor them based on politics, and if it was decentralized, there wouldn't be one central body that can, in the dark, without any explanation, just censor people, but it would be in the light through code that's established and agreed upon, where maybe 90% of people decide to censorship, they could, but it would be in the code. The laws would clearly be in there of how this all works. And there are many applications that we can't really envision yet as to what's going to be in the future, any more than back in 1994, the founders of Netscape, I've heard, were giving a talk, and they were asked to say, well, what's going to be created in this internet? What kind of sites are you going to have? And they didn't think to say, Facebook or even MySpace or Friendster. Of course, they didn't have those examples. and it was very difficult for them to imagine what will be created. And so it's a similar case here with blockchain technology, which is in a sense the first recorded history, in the sense that you can't just change history. It's that history is distributed through all the people that are running the nodes, so-called copies of it, and it's very difficult to change it. Actually, it seems pretty much impossible. There's $100 billion in the crypto market now, and I don't think people have been able to double spend in Bitcoin, or basically hack in a fundamental way. Although there are other kind of hacking techniques that have happened. We can talk about those a little bit. And let me get back to the main things you may have heard about. So you've heard about Bitcoin, you've heard about ICOs, you've heard about a lot of investment gains, you've heard about Ethereum and Ether. Ethereum is, again, this network where it's kind of a global computer that can run a lot of different kind of applications, or in a decentralized way, dApps or dApps. And so new companies are forming all the time that are proposing to do things like, a decentralized Uber, decentralized Airbnb, I'm sure, probably a decentralized, Facebook, Twitter, and so on, and many, many other things. And also prediction markets, where you predict the future and you win or lose coins based on your earnings, in a way that is tamper-proof, and asset allocation. Companies, all kinds of companies, it's very, all across the board are doing things in a decentralized way, and are doing them, and are doing crowdsource. Now I'm getting to the ICO topic. Now, in the ICO topic, so new companies are proposing an idea, or maybe it's an old idea that's now done in a decentralized way, or a little bit different idea, but they want to raise money for it, or they just want to sell tokens for using their idea. So they do a crowd sale of, so basically an ICO, or initial coin offering, whereby they sell these tokens, maybe 50% of the tokens that will ever be released, and they'll sell it. And in some cases, these have now recently raised upwards of $200 million, like in the case of Tezos, EOS, Filecoin, and Filecoin. And basically, a lot of these companies don't have a completed product yet, and they certainly don't have users in a lot of cases, most cases, and yet they're able to raise these very large sums, which traditionally venture capital firms, VC firms, would want to see users, not only a completed program, but users for a lot of different kinds of applications. Like if you were to build a Facebook, for example, a VC wouldn't lend you money until you show, well, the main question here is not whether you can build such a technology, because that technology is not new or challenging or non-trivial, but whether or not you can bring users to the table and have a viable business model that would actually earn money and would grow. Now, in these cases with these ICOs, there's so much money sloshing around, sitting with all these Bitcoin millionaires sitting out there, and Ethereum, millionaires. They're looking to, and the general cryptocurrency market is growing so much. I mean, Bitcoin's grew up by hundreds of % a year, and the cryptocurrency market as a whole is growing by that pace, and a lot of these new companies are growing 10 times in 2 weeks, by tenfold in 2 weeks, sometimes more than tenfold. Just take Neo, for example. Just recently, I bought it at 5, and recently went up times 10 or so. I actually sold it a little bit early because I was playing with timing markets at that time, which is not something that I advise. But I just thought it was undervalued, not because it was at $5. That doesn't mean anything. But because the market value, the total value of all the coins put together, was just about 200 million at the time. And being a Ethereum competitor, Ethereum at the time was worth something like 30 billion, and I thought to myself, well, it might be worth more than 150th of Ethereum. It's only 200 million, and Ethereum's 3,000 million, or 30,000 million, 30 billion. And also the Chinese government doesn't seem too much against it so far, so they're almost giving it a de facto, thumbs up to to this Chinese-made Neo Ethereum. So I thought at the time that it was that it was undervalued. Now it's gone up a lot, and I don't have any particular recommendations about it. Probably it'll go up more in the future, but just like many other things, although that's not really the point of this little story about it. The point is, it's just things can go up very quickly, and sometimes without too much reason that you can pinpoint your finger on. It may be the case that some marketers or some market manipulators put in a large order buy, and then it gives the impression that the market's going to move up. These marketers might use these pump and dump scheme techniques in order to pump up the market and get out. It doesn't necessarily have anything to do with the core company. It's just marketers that are trying to make some money, so they'll pump something up and then sell it and whatever. So you gotta watch out for some of this. Although at the same time, you can also ride the wave with some of this. Now, technically, if you're getting into securities, then you should be in the U.S. You should be an accredited investor. Although what is and what isn't a security is not exactly clear in a lot of these cases, because the tokens can be used for their own products and not necessarily bought just for investment sake, but also can be used. And there's this Howey test by which you determine, or the SEC has determined, what isn't a security. Anyhow, it's not really a problem for necessarily investors. It's more of a problem, bigger problem for companies. So basically, in order to understand a little bit more about the general landscape, you should probably take a look at CoinMarketCap.com and have a look at all the different top 10, 20, 30, 40, as many as you want coins there, and just take a look at briefly what they do. Watch out for some other new coins you may hear about that are decentralized currencies or blah blah blah. I mean, the marketing material, that's basically what all these cryptocurrencies are. So try to understand what's new, look at the team, look what they've done whenever trying to assess something, don't put all your baskets in one place. Usually your eggs in one basket, unless you really know what you're doing. And yeah, as far as ICO is concerned, you can look up ICO lists on Google. I think there's like ICO-list.com. You can see what's coming up, try to see what that's all about. Oftentimes now, the reason why ICOs can be so profitable is because not only when a new product, this token, hits the exchanges like Bittrex.com, Kraken.com, Poloniex.com, this is where you can buy Bitcoin and Ethereum, where you need to buy Bitcoin and Ethereum in order to get into an ICO. And basically, you first buy Bitcoin or Ethereum, you can then trade it on these same sites for many other smaller, lesser known tokens and crypto assets, of which there are thousands, more than 1,000, and there seem to be probably millions. So you get on these exchanges, and once you have your Bitcoin or Ethereum, you can pull it down. You can send it from these exchanges to your own wallet, and from your own wallet to an ICO, and then the ICO will send you back the new token. Now, the reason why ICOs can be so profitable is because when a company does this crowd sale to sell their tokens, when it hits the exchanges where people exchange for other tokens, it's not that remarkable. It's pretty typical to see these assets go up, or these tokens go up in value by 2x, by 4x, by 5x, by 10x. Recently there was 0x, and the company 0x and District 0x. It's a decentralized exchange. Never mind the details right now. But anyhow, it's just another crypto company, crypto product and protocol and so on, and it went up like 10x. And another thing is that when you buy the ICOs, if you buy them early, you'll often get a discount, like in the first few hours or first few percent of the coins sold in the crowd sale. You can get a 25, 50, maybe 75, maybe 90% discount. So if you get, for example, 90% discount, then the product goes, so that's like 10 times cheaper than normal. Then the product the tokens go up another 10-fold once they hit the market. That's 10 times 10. That's 100 times your money. You know, it could be in a couple weeks sometimes because the ICOs only last sometimes only days or hours, even because the tokens sell out so fast, and the company wants to retain some for later. The foundation, usually not a company, the foundation wants to retain, let's say, 50%. Then you made 100 times your money by the time it hits the exchanges. And usually the peak growth once it hits the exchanges within the first day, maybe first 2 or 3 days. Afterwards, prices tend to go down, not always, but tend to go down, not because there was a scam or it was a pump and dump, but just because investors were very excited about this particular thing, and then some other exciting thing comes along, because after all, it's not like the product is going to be released within a week. They raise the money, and then oftentimes a lot of development still needs to happen, and for months or maybe years, maybe a year or two. So while there are sometimes good strategies to hold for a long time, like a new smaller altcoin or from the ICO period. On average, these don't perform as well as Bitcoin. However, in the short term, you can do much better if you get the right ones. Obviously, you can get 10, 20, 50, 100, almost 100x within a matter of weeks, sometimes days, whereas with Bitcoin the rise is very, very fast, like 500% a year, or sometimes more, and so on. But and almost like a millionfold if you choose the right dates within 6 years. While that's incredibly fast, it's not as fast as 100x in a few days. So these can provide a lot of opportunities, for accredited investors, or if you just happen to like the token, you buy the token, it happens to appreciate, hey, that's fine too. Happens to appreciate by 10 or 100-fold. So those are some of the basics about ICOs, how to get into them. So yeah, you would go on Coinbase. In order to get in ICOs, first you have to acquire some kind of crypto assets like Bitcoin, Ethereum, Ether, and so on. You can buy those in Coinbase.com or Poloniex or Kraken or many others. And you can only buy a certain amount after you've been verified as yourself with your passport and documentation. It takes a few days, sometimes longer, and you get higher and more verified as you provide more information. And as you become more verified, you can buy more at a time. So you can do that with multiple exchanges at the same time if you really want to get a bunch. So you can get verified in Coinbase and get verified on Poloniex and Kraken and so on. And I like to do my exchanges on Bittrex.com, but I think you can't buy coins there. You can just do exchanges, but the exchanges are very liquid. They're very busy over there, so you can exchange very quickly, and they have lots and lots of the smaller altcoins. But they won't have the ICOs. So the ICOs, again, once you buy any like Bitcoin or Ether, usually you can use that to buy the ICOs. The company will put forth, you'll see in ICOlist.com, whatever, you'll see some ICOs coming out at such and such time. It's going to last 2 weeks, 4 weeks, and a week, or an hour, as long as it takes, whatever. And they're going to say, here are the instructions. You have to send Bitcoin or Ethereum or Ether to this address, to this Ether address, or this Bitcoin address, and you'll get back, for every Ether you send, you'll get back, 10 of our coins, or whatever it is that the exchange will be. And that's how you get involved, pretty much. Now a little bit more about what's going on in this crypto space. When you first buy cryptocurrencies, you may want to diversify just a little bit. Maybe get some of the top 5 or 6, 20 whatever coins. You get Bitcoin, Ethereum, maybe Bitcoin Cash, which was kind of a spin-off of Bitcoin when there was a fork in the road, literally speaking. And so Bitcoin, Ethereum, Bitcoin Cash. You can get Ripple. It's a little bit privatized, centralized in the sense they say, but you can get Ripple. You can get Dash, which has very fast transactions, or transactions per second, TPS. Bitcoin can only handle about 10 transactions per second for all the global demand, and Ethereum only 25. And it'll be a lot. Ethereum will move to a lot more once it changes from that proof of work that I talked about mining before to a proof of stake. It's a lot more efficient. It's like thousands of times more efficient, and has its own, let's say, downsides, but pretty much it's an upside. And not only that, Ethereum will now has a 14% inflation rate, but it'll have only a 0.5% or 1% inflation rate after they move to Casper, which is the name of their proof of stake consensus algorithm, as it's called, by which everyone comes to consensus about what is the valid history and what is not, what were valid transactions and what were not. Yeah, it'll move up to a much higher TPS, or transactions per second. So yeah, Dash has high transactions per second. It also uses a secondary layer above miners called masternodes, where you invest something like $100,000, you get back some amount of interest. That's a large amount. You usually don't need $100,000. You get a certain amount of interest back from the system, and then there's only a limited set of people that are validating the transaction, so they happen much more quickly. So the amount of money you need to invest in cryptocurrency, any amount at all, you basically can you can buy a very tiny amount of Bitcoin. Bitcoin's now worth 4,100. It was just 1,000 just very recently. It was 100 very recently before that. And anyhow, you can buy just a very small amount of Bitcoin. You don't need a full Bitcoin worth over $4,000. Or Ethereum or any other crypto asset or token. So that's kind of the basics of what you need to know. Just getting started. So yeah, get on one of those. You can buy on Coinbase again, or Poloniex or Kraken, and now if you want to avoid volatility in the market, like if you feel like, oh, I'm scared Bitcoin's going to fall and whatever, you don't necessarily have to change it back out into dollar, or send it back to your bank or whatever. There's something called Tether and BitUSD and a few others that peg, like it's a crypto asset still, and you could still get it on one of these exchanges, but it's pegged to the US dollar or the Chinese yuan or whatever, or gold or whatever it is that you want to peg to. And so like with Tether, it'll just stay the same value as the dollar. Now be careful though about trying to time the market. If you believe in cryptocurrencies in the long run, which I believe is a good bet, because I don't think that, I think the chances are relatively low that governments are going to ban up altogether. They can barely ban up to do anything, altogether, but ban up altogether and all ban, cryptocurrencies completely and so on. And also because, a lot of probably powerful people within governments and secret agencies and so on that are powerful within governments probably own cryptocurrencies, and they don't want to see the value of their investments go away or be held something that's basically illegal to use. So, I think that it's a little bit unlikely that there would be a global, worldwide government coalition to stop everything about it. And also, people say, well, Bitcoin. What if another coin comes out and so on? It'll go to zero. Well, its value will go to zero. But just look, Bitcoin forked just recently in Bitcoin Cash, and the Bitcoin Cash is just kind of like this, this orphan sort of that came out of it, but yet people believe it has value for good reasons. But people, you might have said, oh, it should have gone to zero. People did predict that one of them will go to zero and so on, or very low. But didn't go to zero. It's worth something like $16 billion right now, out of nothing. I think it's 16 billion. Let me just check on CoinMarketCap.com again. It's a good site for you to keep track of what's going on. Yeah, 16 billion at $487 per coin. So yeah, take a look at CoinMarketCap. Get a feel for how things are moving. Once you put some money into crypto assets, be careful with trading too much in the beginning. What tends to happen is you just don't try not to buy sell low and buy high. Like, these things are very volatile. Just because something's going down for a little bit, don't think it's going to continue going down. It could just jump back up without very good explanation many times. Now, sometimes some people use explanations like technical trading explanations. Or these technical traders, they look at sort of these patterns in the price histories, and they look for what's called Fibonacci patterns. A Fibonacci series is something that occurs in nature. For example, in seashells, the radius, the circle keeps growing, and in the sunflower seeds, like on a sunflower, the number of seeds that are on the flower petals and so on, and also in behavior of societies and many things. You see these Fibonacci series. Now, what the series is, it's a tendency towards a certain ratio. That the number of it is the ratio is 1.6 something. Now, that number comes from the following. The series is constructed this way. It's if you add 1 and 1 together, you get 2. And if you add the last two numbers, 1 plus 2, you'll get 3. If you add the last two numbers, 2 plus 3, you'll get 5. 3 plus 5, you'll get 8. Now the ratio of that, for example, 5 to 8, and the next one will be 5 plus 8 equals 13. Now 8 to 13. The ratio that converges gets closer and closer to this golden ratio, 1.6 something. And it has the ancient Greeks noticed it, and you noticed it in nature, and thought it was pretty cool, and so on. And actually, like biological populations, colonies, and so on, will tend to follow this Fibonacci ratio in a lot of different ways. And stock markets will naturally too, and they'll especially do it when traders are looking out for that. So, getting back to technical traders, what do technical traders do? They look for certain patterns of Fibonacci. Now, they don't know exactly what's going to happen, but they see these patterns, and they are pretty clear sometimes. It's you see these patterns, but then once something starts to happen, they say, oh, if that starts to happen, then it'll most likely go up to this point. Or if it goes down from this point, then it'll most likely go down all the way down to this point because of this Fibonacci pattern. And also it's self-reinforcing because a lot of technical traders are trading based on those assumptions. Another aspect of technical trading involves candlestick analysis, and what that is let's say within an hour period, you'll have the buy and sell ranges for some asset, and then there'll also be something went as high as or as low as. So there's like a candlestick, like the twig, and so on, and the foot. I forget what they call them, but that also gives you some indication. There's ways to read that, and it's a whole other topic that we can get into in a later lesson, but that's technical trading. So sometimes these things are happening for these technical trading reasons that if you're looking at, for fundamentals, you just won't notice. Some actually I won't. Well, some, for example, the EOS creator Dan Larimar has pointed out in his EOS video that BitShares and Steam are actually highly used crypto tokens, crypto assets, but their value is not very high, and they don't perform all that well because there's not a lot of hype in those communities. I think it's actually a good indicator. They're actually solid companies that are making real cool technologies, like Dan Larimar basically invented delegated proof of stake, where you vote for someone based on your stake, based on the amount of coins you own. You vote for someone to run the network, essentially, to validate it and so on, and forge new blocks, and and make new and validate the transactions in the network for money, and instead of mining it. And delegated proof of stake, what he invented is a way to vote for someone else to do that. Because not everyone has their computer on when they're doing proof of stake, and it makes it inefficient and so on. But it's a little bit like a representational democracy or a republic with its own problems, maybe concerns that it would be easy to get people to vote for, or they're not paying attention to how the people they voted, how the representatives or the delegates, as they're called, are actually performing. So maybe it has its own issues, but on the upside, it has very high transactions per second, like in the hundreds of thousands it's claimed, and EOS is supposed to be a distributed version of that can do millions of transactions per second. And that's actually their claim to fame, is that, well, if blockchain ever does get really big, well, in order to, let's say, do something like what Visa does, Visa can handle 200,000 or does handle 200,000 transactions per second. Bitcoin only does 10. How is it going to deal with that? Now, there are ways. Bitcoin has this so-called Lightning Network, where once you connect to the network, you can send pretty much instantly to anyone on the network, but it has its own issues, like different kinds of centralization involved in it, and also it can't run general purpose. Well, in the case of Ethereum, you have Raiden network, but it's very similar, but one of the problems is it can't run general purpose programs anymore, such as the door lock in my Airbnb example. It can only handle things where the order of the operations doesn't matter, like if you're voting for something. like you're voting for the funds of something to be allocated to something. You're voting for the protocol of Ethereum to be changed, or Tezos, which is an Ethereum competitor that raised quite a bit of money, over 200 million in the year ICO. Part of their claim to fame is that the governance model there is also on the blockchain, so you can vote for protocol changes. For example, the change from, let's say, proof of stake to something else. Whereas in Ethereum, it had to be kind of, the developers had to come to an agreement, and the miners will have to decide to actually mine whatever it is they come up with, and so on, rather than the stakeholders deciding the direction a little bit more. Anyway, so with delegated proof of stake, you also be able to. So with EOS, you'll be able to, with Tezos, you can vote for protocol changes. I forget where I was going a little bit before this, but basically there are a lot of different interesting things happening in the community. So you have to just really keep a close eye on everything that's developing, because like daily there'll be ICOs, and new developments are happening so fast. So that gets you a little bit of a primer into everything that's happening there. Well, just to finish off my last point, I was just talking about how sometimes the price will fluctuate not based on fundamentals, but based on market movers and so on, and pump and dump, and just Fibonacci and weird things, tea leaves, who knows. But some things that that people are actually using, like Steemit, which is basically a social network in a sense, where like Stack Overflow or like some blogging sites where you blog and people like what you've blogged or give you thumbs up and so on, and they're also verified that it's like one single person, you'll get money from that and from the fees collected within the system. So the system rewards its own users, which is pretty cool. So maybe something like Facebook or Twitter, decentralized version of Future would do something like that. But what I wanted to say is, even though Steemit and maybe BitShares also has a lot of basically users, their price is not sky high. It's not bad. It's in the top 30 of the crypto assets, crypto tokens value, but it's it's not that high, and it doesn't move around, doesn't jump all that much up and down as much as maybe some others. Because of maybe hype in the community. So even though you like something for the long term, doesn't necessarily mean, like I personally think BitShares, Steemit is great, EOS is really amazing, but would I buy it at a certain date and hold on to it for such and such a long time? That's another issue to consider. You may just want to buy something because you think it's good now as an investor. So that's something to keep in mind as well when you're assessing what you think is good or not. Now, if you think it's bee's knees or whatever, the next greatest thing since sliced bread, then you got to think, well, maybe a lot of other people do too, and not so savvy investors and so on may end up pushing that price up. And so it takes a little while to once you play with the market, you'll get a sense for how these things operate. So take it slow in the beginning. So don't lose money when you're learning, but it can be very interesting to see how all the dynamics play out, and keep track of these companies. So when you go to check out a company, you can follow them on Twitter, on Facebook. There are Facebook groups like cryptocurrency investing, Ethereum investing, and so on that you can follow and see what people are talking about, and also specific to a particular company. So you can follow them on Slack. You can follow them on Reddit. You can follow them on Telegram, which is like WhatsApp, but it's like basically on your phone, on your mobile. Well, it's also on the laptop, but basically you have thousands of people in there talking about particular companies, and you can see how what's going on there, what people are saying. As I said, also on Twitter, and you can also check out the code that they've written on GitHub. Whether they forked the code, maybe they basically copied the code from someone else and not made very many changes of their own. Maybe they don't have very much code of their own. If you're technical and programmer like I am for 20 years, plus management and entrepreneurship experience, you can get a sense for which projects are really serious in terms of their development efforts. Doesn't necessarily mean that you have to have a lot of development and code to have your value of your tokens high, but it is a pretty good indication. A lot of the coins in the top 20 have developed their own blockchain code bases or forked and done some significant changes, but it's not a hard requirement, and for good reason. You don't have to necessarily have developed a lot of code for the idea. Maybe the white paper, maybe you've developed a lot of other types of technology without having written the code yet, and that's why you're raising the money, because you want to develop the code. And so don't let that bar you, but it's just something to look at, another thing that some people talk about. Okay, well, if I think of any other topics to raise, I'll create a part 2 to this video. I'd also like to hear what are your initial concerns before we delve down a lot deeper into some of the other topics. So again, to wrap it up, basically you've been maybe hearing from news and seeing Bitcoin prices go through the roof times 10 and times 10 again, times 10 again, and hearing from some of your friends, and you want to get in on it, and Bitcoin will probably go up higher, maybe much higher, because I don't think governments are going to stop it. I don't think it's going to fall to zero because some other coins happens, but it has some issues like proof of work takes up so much processing power, and there are competitors and so on, but still I think it'll continue to go up. But there are many other coins that may go up faster and so on if you know what you're doing. Statistically on average, Bitcoin has pretty much done the best. If you just buy and hold. But if you really get into this game, maybe you can do better than the market or beat the market. Which actually gets me into a good point, which is part of the reason I'm making this video is I'm making my own ICO, my own crypto contract. It's a smart fund. It's basically it's a decentralized user-created crypto investment fund platform. So basically, whoever's doing really well in investing in the right ICOs, you can copy them and get the same basically returns as they do. Now, there are competitors that have already done something like this, but I have a really important, critical actually, secret functionality. I'm not going to talk about that functionality yet. I've not yet gone public with that, but it's critical aspect of this kind of application. And so I wanted people to first see me talk about the general space, and that's why I'm making this video, and to help people get into it. If you like what I've explained so far, maybe you'll be interested later on in getting into my ICO as well. Up to you. In the meantime, I hope that this has been really informative, and I'd be very interested to hear your questions, your comments, suggestions, and so on. So just let me know, and I will see you next time. Let's see, let's turn this off.